Was Friday a fluke or a flex on the behalf of the Bulls? Let me explain. The Bears made a lot of progress, technically speaking, in the charts all week. It seemed like they had control of the week until the very last bit of the day on Friday when this happened. So we are left with a positive outcome for a bearish week. Bearish because the candles were red. Positive because, let me show you. Nothing bearish about this candle when this is the all-time high. That is the S&P. Nothing bearish about this candle when this was the all-time high. That is the QQQ. For the S&P and the NASDAQ, the Bulls have complete control, and they basically have nothing standing in the way of them breaking out and finishing the job. For example, the SPY could, within days, be above 540. From the breakout, way below here at 460. You've heard the story over and again. If you look at the IWM, we've been saying they need to break out. So 211 was the prior fail. And then for the first time, this gang of 2,000 stocks would be in relative open air. Okay, it's not the all-time high, but there's no recent resistance until you look back to like 3 years ago, 2021. The other stick in the mud, which happened last week, is the Dow. So let's put some lines that we can watch for next week. Will the IWM break out? And if they don't break out soon, and they've been dragging their feet, I think they have a correction coming. Same with the Dow on the IWM. If they don't break out soon, I think the IWM would also have a retracement, at least down to like 192. So both of these have the opportunity, and they don't need much. The IWM just needs like a 2.5%, maybe 3% rally by next Friday. Now, the numbers on the SPY and the QQQ are like night and day to these two. The assumption is that we will make a new high. We are so close. We barely need a little sneeze. And 1.4%, you'd be up in open air again. In fact, we did break new highs on the NVIDIA. If we zoom in, then we will get more information. On the higher time frame, it looks like just one giant candle. In reality, we have to cut through a whole bunch of lines from last week. So for example, on the SPY, I would be looking for how well they do above 522 and how easily they can cut through 531 and 32. And of course, that's so close to the all-time high. So if you look left, we had this zone, which I'm putting a box around. That's the NVIDIA reaction zone. They reported, everybody went to the moon, and that was the top, and everybody went to hell, and then we rallied halfway, and then we went to deeper hell, and now we're back to the middle. So in reality, the fight is even. There's a lot of resistance above us because of volumes that happened from last week. This fight here presented a lot of transactions. This fight here presented a lot of transactions. On the way back up, we should stutter around it. Let's see how much, okay? Let's put the same logic on the QQQ. And I want to say that the QQQ looks a little bit weaker than the S&P, which is pretty strange because this is what led the market up from last year. So we should pay attention to why are they lagging. For example, Microsoft. Why is Microsoft lagging? In fact, when I asked you guys to give me tickers to review, not one person asked for Microsoft and not one person asked for NVIDIA. I thought that's strange. So have we lost interest in those two stocks? Because we do represent the market. We have hundreds and hundreds of readers. What I'm looking for is this mess of volume above here on the NASDAQ. So how do we trade this? The actual trades, I won't change a thing. I'm going to short rallies by using bear call spreads, selling credit call spreads. This way I don't need drops to win. Occasionally I will buy a put or a put spread here and there. And I will try to go long good stocks that fall into support. So I'm not like outright bearish the market. I just don't want to invest up here. I want to trade up here. All right, folks, I will have an update to this midweek if I can. If not, read the morning notes if you're members. And in them, I lay lines, and I will mention some of these lines we discussed here.